Good evening. This is Doc Severson for the Theo Night Report for Thursday, November 30th. After today's continued massive move in the equity markets, I think just about everybody has run out of superlatives to talk about with respect to this market. In fact, most of the news that we saw today was about Bitcoin and not the equity markets. So just everybody is assuming right now that this is a very normal move, this runaway move to the upside based on optimism. And quite frankly, we could throw a whole bunch of different indicators at this current market, and each one of them would probably tell us roughly what we wanted to see based on that, whether or not the market was oversold or exhausted or triple exhausted based on multiple fractal time frames, etc., etc. There's going to be times where there's just no study that accurately captures what's going on in the supply-demand imbalance of price. Sometimes it's better to just look at price itself. Now, the best analog for this runaway market that we currently have right now in the equities is to look back a few years at what happened with silver. So first of all, there's four different types or cycles to what happens with a market rally. First of all, it starts with disgust. And then what occurs after that is usually, and this is not very vertical, but usually what happens after this is what's called disbelief, as the market rallies in the face of universally bad news, which occurs from there, right? So we have the market rallying in the face of bad news. Eventually we get into the third level, which is acceptance. Acceptance is when everybody generally looks at each other and with a knowing nod, the conventional wisdom is that the market is going higher. And that leads to the fourth phase, which is, in this case, the most dramatic, which is euphoria. So euphoria shows up when everybody thinks that the market will never, ever go down again in their lifetimes. And so silver was much like this as we got into early 2011, where it went nearly with an infinite slope to the upside. Now, euphoria always eventually leads to disgust. Disgust started to kick in and really has not changed all that much in the years since. Really, silver has been hanging around the $15 mark for quite some time now after that initial euphoria, where it peaked out around 48. So what can we learn from this, from silver's move back in 2011 to apply towards today's markets? Well, first of all, certainly I would say, we'll get over to the S&P in a minute and look at that, but right now I would say certainly we're getting into the euphoria phase. And not only just from a sentiment perspective, but just the optimism. We're seeing a lot of very high numbers. We're seeing a lot of, excellent earnings coming along. I think everybody at this point, and this has all been exacerbated by the Federal Reserve policy and central banks around the world with very low interest rates, and there's really no game in town. So this is almost the perfect storm that we see in equity markets right now. This is why the bears are just completely out of gas and looking at each other like, can you believe this? So let's go over some of the characteristics of what ends up being a runaway market into the euphoric phase. First of all, what we will see is generally we will start to see a rise in ATR, average trading range. So average trading range will actually start to increase. And most people are not really aware of this. Usually you're thinking that the range increases on corrections, but in this case, it actually will start to run away. As it runs away, you start to get bigger and bigger candles, and that's why the average true range does increase. So the first clue is that we watch for the average true range to be increasing. The second characteristic that we'll notice about this is that notice how long it took for these gains to come along here. It took a long time. But notice how fast the final gains came. Most of the gains came in a very, very short period of time. And so this is typically what you'll see in just about every runaway market is most of the gains will occur right at the very end. Just like most of the selling in a bear market occurs right at the very bottom, right near the bottom of the move. Now, the next characteristic is that this type of top is very susceptible to any form of bad news, which is basically any form of information interjected into the market, which was not already priced in. So this is not just, just a bad report or something like that. This is a phenomenally bad piece of news, which was a game changer. I don't remember exactly what happened to silver at that time. I think it was something to do with the way it was traded on the exchanges. Now, this usually doesn't create a fatal low. What has to happen from there is a lower high has to be set up. And this is always what marks the very end of the move, is where a major higher time frame, such as a monthly chart, lower high sets up, and that puts a fork in that runaway market. You can see very quickly after that lower high was printed, this chart was done. So now let's go over to a chart of the S&Ps and let's relate the same lessons from silver over to the S&Ps. Okay, so 2015, 2016 is when we had our last period of corrective tape that was in here, not counting the Brexit move and not counting the election. So this is where we had our last period of disgust, disbelief, disgust, right? So this is, since that point, we've gotten disbelief, and of course, a little bit more disbelief as we got into the end of last year, so about a year ago, certainly disbelief. And then as we got into the new year, into 2017, and people, remember how much skepticism there was. Well, wait till the first tweet that guy sends out. And, now we can see that it really didn't matter all that much. And so this was sort of the acceptance phase. So we had acceptance all the way through this summer. And now what we're starting to see, you can see just even with your eye here, you can see how the slope has taken on a new and much more parabolic move. So now we're really truly running into that sort of runaway market condition where the slope is almost vertical. Now this is not as dramatic as silver was back in 2011, but still the point is that we're getting the same characteristics here with the runaway euphoric move. Now we're also watching ATR here, and ATR, after a very almost several year low here, has started to increase again. So that's another clue that we're seeing. Now, everybody is ready to stick a fork in the S&P the very day that we get a bad piece of news coming in. And I don't believe that because of what we've learned with how markets operate. So the next piece of bad news that comes in, it's not going to be a 200-point day to the downside, right? It's not going to be the end of the S&P move. It will generate a higher low, and it will generate more negativity. Typically what we see is after that move, though, we see even higher highs for that. And then this is where the runaway market truly gets going. If you want to see an example of that, we can actually go back to, if we go back to here and look at 2007, we saw much of the same thing here. 2007, we had our first piece of bad news. This was the carry trade coming in. This was Alan Greenspan saying, oh, you know what? I think we're going to have a recession coming up soon. What do you think we got from there? Negativity built up, worked out to the upside. This is where we started to see ATR definitely increase as we got into this runaway market to the upside, especially when the latter part of 2007, Bernanke talked about actually cutting rates for the very first time in years, right? So the market went ballistic to the upside, setting new highs, and this is where the trouble started. So we are a long way away from having any kind of large scale. Remember, market tops are always a process. Market tops are always very noisy. They're always very volatile. They take a long time to play out. So frankly speaking, unless Kim Jong drops a missile into St. Louis, I think we're quite some ways away from seeing a meaningful real top. Markets could actually go quite a bit higher from here. Now, this is not based on my projections. It's just based on what we're seeing in the current market right now. We're definitely running into the euphoric zone right now, and it's just beginning. So the first real sign of a true market top will be an increase in volatility. We're just now starting to see that. Okay, that is it for today's report. Thanks for listening, folks. We'll see you tomorrow.